Hey traders, Raghi here, and we're going to take a look at some of the markets that we've been focusing in on in the Simpler Forex chat room in the mornings, 8 to 10. It's really about navigating these volatile markets, and that's really what it's all about. How do we find clarity when the market's really acting as if there isn't any? And where do we find the clarity? And what type of setups are best for markets that don't necessarily behave according to some of the bigger picture macros that we're talking about. So I'm going to dive into a few of these right now and hopefully walk you through some of the nuances so you can see where the setups are and start to understand how these opportunities work. So first of all, British pound, Japanese yen. Now, why am I looking at British pound, Japanese yen? Well, that has a lot to do with watch list selection and heat maps. What are the best ways to, for example, sell British pound? That's one of the main stories in my book right now. How do I buy yen? Another main story in my book right now. So I look at them, they have excellent contrast. Maybe we'll get into a conversation about watch list building later. But for now, realize that one of my favorite ways to sell pound is against the Japanese yen and also against the euro. We've been in and out of this trade about 3 times now, and it's a pure trend follow. Again, how do I sell pound and how do I buy euro in this case? So one of the challenges is how do we navigate the volatility that we've been seeing in the dollar and capitalize on that in the euro? Well, one of the things the dollar's been telling us is simply let's look for euro strength as long as this US dollar can remain under 97, under 97.20, which is basically the major cycle level and the minor cycle level. So I'm not playing the US dollar directly, but I'm playing euro pound. While a lot of traders might wander into euro US, I'll play the clearer contrast. How do you deal with volatile markets? You find the clarity in pockets where you like an individual story, like, for example, buying euro or selling pound, and you pit them against one another. One of the worst knee-jerk reactions I see traders make time and time again, especially if they are not predominantly Forex traders, is they always wander into the pairs against the US dollar. And a lot of times that just isn't the best way to go. Let me give you another example from the yen point of view. A lot of traders are wandering into US dollar Japanese yen, and not that this isn't a good pair. I think there's a lot of reason to want to sell US dollars right now, especially when you look at the outlook on rates, when you look at Fed fund futures clear out into September or even December, and they are not indicating really any realistic chance of a rate hike. So yes, you think those dollar bids are going to slip away. We can sell US dollars and buy yen as long as the Dow is still holding on to the downtrend. Now, the thing with dollar yen is it's not necessarily a contrast that I trust. If we get Euro ECB, well, if we get ECB stimulus, if Mario Draghi really does, for the first time in a little while, really deliver on stimulus. He didn't in December. He really didn't do much the end of last year. In fact, he broke the Euro-US downtrend at the end of last year when he did not deliver. A lot of traders are thinking, well, you didn't do much back here. I'm not expecting a whole heck of a lot. The Fed's not going to hike, so let's buy euro. So what you end up with is this issue where what if he does? What if he does deliver on stimulus, as they joke and call it the Mario Draghi's bazooka? That would immediately sell euro off and rally the US dollar. So I think between now and March 10, I want to again realize I'm navigating volatile markets. Can I sidestep the euro? Can I sidestep the US dollar? I sure can, by focusing on stories like the British pound, the Canadian dollar, the Japanese yen. Or I can take a tack that realizes that I do have a calendar date I need to consider, and I can play the euro and the US dollar leading up into March 10, paying very close attention to how traders may want to position themselves in the euro before the March 10th ECB meeting. So where have we taken? So that's kind of a big picture of where my head is at, what the narrative is. What have I done in the meanwhile? We are now closing in on about 1,200 pips on the British pound, Japanese yen. Why? Because it was easier to trust a sell into the pound than it was a sell into the US dollar. So rather than playing US dollar, Japanese yen, which has obviously been moving down lower. I'm not taking that out of the equation, but the easier trigger, understanding where some of the resistance was and making sure I could sidestep the unknown quantity of the US dollar. Remember, these things look great in hindsight. Dollar yen looks great in hindsight, but what if the narrative with the Fed was different? The narrative for the MPC has been pretty steady. They're not hawkish. It's an easier sell. It's an easier story, and it makes for a much easier, much less volatile pound short yen buy. So sometimes it's not about, I could hit it out of the park with something like this, right? But the volatility made this much tougher to trade. So you take a look at the pound yen and you take a very rewarding yet much more controlled short here. And that's what it is about navigating volatile markets. It's not really looking at, well, where is that home run? It's about, hey, can I get to second? Can I get to third base? Using a baseball analogy. So pound yen has been a terrific trade. Again, what's another great trade? Euro pound. This has been a very organized move. And again, I think a lot of traders don't focus enough on organization, because it's the organization that gives us good risk rewards. It's the organization that gives us much more predictable movement. To look at a big move in hindsight and go, wow, that was great, I wish I got in on it, that's the loser's trade. That's a loser trading mindset. That's a loser's trader mentality. Okay. Winning traders go, well, I'm not always going to get the biggest move, but where is the organization so I can build a smart trade with a good risk reward and take advantage of the organization, a certain amount of predictability. Euro pound was one of them. Pound yen was another. So again, navigating volatile markets is about understanding organization, removing yourself from the mosh pit of volatility, adding some predictability to your trades, and letting yourself sleep at night. Okay. So let's take another example. I'm going to wander away from the Forex markets, but into a very important market, and that is the Dow. I've been steadily selling the Dow. I'm doing it again right now. I realize that I'm not looking for lower lows. If I take a 16,120 all the way up to say 16,4 short, all I'm going to do is look to ride it down to about 15,650, maybe 15,550, that area. That's it. Is that a good trade? It has been now for about a half dozen times. 3 times very conservatively I've been in and out of this thing about a half dozen times now. At some point, will the Dow transition? I imagine it could. And right now I'm also, again, how do you navigate volatile markets? You look at what other market trends could emerge and you think 4, 5, 6 moves down the road. So I actually also have on the down days call option, longer term call option positions that I am building. So eventually, if this market reverses and flies north of say 16.5, I've got options that have time on them that I could take advantage of that move to the upside while simultaneously taking advantage of a very profitable short sell that I've taken again a half dozen times from this bottom line of the wave, the 34 EMA and the low, down to these support areas. Time and see all these little arrows show me what I call breadcrumb lows. These are powerful potential profit targets. So next, let's talk about crude, because that's kind of happening now, and this OPEC story has been working its way into the market. And one of the things I talked about in the morning chat is OPEC has a credibility problem. That wick to the upside, despite the fact that the Dow is now up right now about 200 points, notice this crude oil market is not benefiting from the risk appetite. In fact, specific to today's rally, this day after President's Day, yen really isn't participating that much either, which I find very, very interesting. Not to mention the fact that the Dow started to rally into the doldrums. It didn't rally and really strengthen after the clearing. It was strong, but it really started to rally into the doldrums, which I always find very suspect. But there's not a lot of widespread participation in some of the markets that I would look for. I am short the crude oil market again. So looking at this crude oil market, looking at the way in which I'm simply trend following on a day that traders are saying, hey, OPEC's trying to grab that narrative. They're trying to spook people into no longer putting in lower lows, and maybe that's going to work. In another update, I'll talk about how OPEC and the BOJ, the Bank of Japan, are playing tactically a very similar game. But in the meanwhile, I will short crude just as I'm shorting the Dow right now. So how do you navigate volatile markets? You look for clarity, pockets of clarity within a larger narrative, and you wait for your price. You wait for your price. Even as this market was rallying these 2 days, I did not short. I knew where I wanted to engage the market. I have a very consistent zone, and I took advantage of that zone by waiting for prices to come to me and hit my limit orders. And I'll continue to do that over and over again. But the volatility of the market, in order to get the clarity, sometimes you need to go intraday. Sometimes you need to start thinking about what could be longer term trend follows in a 480 or 240 minute chart. Or can I take advantage of the confusion by going very short term, like a 5 minute? So a day trade becomes a very powerful tool for volatile markets. Very powerful. And I'll talk about that in the next update.